What's going on YouTube? It's Louis here. Hope you're all well. Looking at Bitcoin again. Thank you guys for the support on yesterday's video and didn't reach 50 likes. Let's get to 50 likes again today. Over 200 of you are watching the video, so we must get, over 50. It's not even a quarter of you. So yeah, if you want me to continue with the videos, we need likes because YouTube don't help. Said that a million times yesterday, but it's the truth, guys. But yeah, we're holding the 618. We're bouncing off here. You can see every time you've bounced off this pink line with this, liquidity grab wick over here that we're seeing is tending to bounce back to the top of the range. So from here, we went to 44.4K. From here, we went to 44.4K. So for me personally, I think that is what's going to happen again. We're going to come back up to 44.4K. The only thing in the way at the moment is this green resistance as well as these EMAs. Get above these EMAs. That is when we have confirmation. Okay, now we can long until then. Until then, there's that risk we can actually come back down a little bit just into here and then go back up. This is why I'm personally not jumping into any trades at the moment. I want to relax at the moment. Of course, you can see a double bottom here, and technically it's broken out yesterday. It's got a higher body candle close. However, you can see the body actually closed below that wick. So technically, we don't have a valid breakout just yet. With the bodies, of course, higher highs, amazing. I just want to see a body closing above that wick. And that wick is $41,557. So 41.5K, basically. Once we're above 41.5K, we're basically sitting there right now. Get above that, then yeah, we can be happy to long. Until then, there's that risk. We come back down to these lows and obviously go back up. And you can see that would be some sort of double bottom over there. And then this small double bottom that we're seeing could be just the first part of the first leg of a larger double bottom. So yeah, personally, I think that this is nothing. When I say looks similar, it doesn't necessarily look exactly the same, but similar structures. So this move for me is looking very similar to this move over here, where we came back down into the support after this liquidity grab wick, and then you had 2 days of up, 2 days of down, and then we got the party started. So look what's happening here. 2 days of up after this liquidity grab at support, where we've had this double bottom. We're running into key resistance now. This is why I think that there should be a reaction, guys. These EMAs are above us. It's telling us that we are in a downtrend. We have a bearish cross. This is bearish. This should go down. We're under the 200 EMA after getting above it. This is a fake out. This is the worst signs you want to see. This is telling you that we were in an uptrend. We basically were validating one. All we need to do with this bounce is go higher than that. And none of this would have happened. It'd be a thing of the past, guys. This range over here would be flying, honestly. We'd probably be at the 50s, 52K. in around there right now. Instead of this going down here, just the same move to the upside basically. But unfortunately, we did not break this high, and because of that, you had a throwback or a fake out, and it's basically saying that you do not want to go up, and that's why we're seeing this downward pressure now. But we've found support. We've come back into this zone, which was previously drawn. We didn't edit the line for this area. It was just, yeah, it was a perfect line. You just look at the past, look to the left, structure leaves clues. Always write this down every time you look at a fresh chart. Look to the left, structure leaves clues. That's why I know that this is starting to look like this. We need to recognize these patterns that are happening in this current moment. Eventually this will get invalidated. It won't follow one thing exactly forever. Remember a few months ago, back in January or February, or I think it was February, where we kept on noticing, the targets kept on, instead of hitting the 1618, it was only going to the 1.272. Then that got invalidated. Then there was another thing. I've forgotten exactly what it was, but maybe multiple W patterns or whatever. And then they stopped working out, for example. So we need to see here if we are actually going to get above these EMAs, because technically at the moment we should actually go and put a lower low. So that's why I'm not jumping into a trade yet. I want to see a close above 41.55K with a daily candle close. We just closed below at 41,500, so we were literally like $50 off breaking it. Until then, you haven't technically broke it, still under it, so that's technically still a lower high because you're below the wick. So once we are above this wick at 41,550, then we can be a-okay. If you have got to this point of the video so far, then thank you guys so much. Please like, subscribe and comment to support the channel. And yeah, so this is why I'm not jumping in. I want to see if we are going to come back down one more time. I don't think we're going to lose this wick. This is, for me, the low right now, if we are to go, obviously, bullish. But it does not mean that we can't come back down. We can afford to come back down to test the pink line again and then obviously head back up. For me, that's what I would personally rather. I'd want to accumulate in, you can see, this ascending triangle, because we have this resistance and this support. So we're actually coiling up here, consolidating, and that's why I'd rather actually come back down one more time, get that retest, then obviously head back up, and we can break out of this ascending triangle, and you can see that would be a nice double bottom like that. So, and then of course our next target would be 44.4k. That's it, guys. Thank you for watching. Just one last thing, don't forget, we've been calling out for this rising wedge or bear flag for absolutely months now. I think even back since over here we were calling it back in February. So 2 months ago we were shouting about this, but no recognition. So that's why I urge you guys to share the videos to people you know, to get like-minded people that are not moon boys, that are not trying to tell you guys we're going to 100k tomorrow. I'm a person that's just going to bring you the reality, give you that reality check. I don't want to hype you guys when there's nothing to be hyped about, you know what I mean? That's dickhead moves right there. So I'm not that sort of person. And yeah, thank you guys for supporting the channel over these last few months. It's been a great journey. And yeah, let's keep growing. Thank you guys. I'll catch you in the next one. And as always, peace. So guys, here are the crypto packages. If you think you have what it takes to stay disciplined and consistent over the next 3 to 6 months, then I'm more than happy to help you 10x your learning curve. So you can already be a complete beginner, or you can be advanced. It doesn't matter. I'm here to turn you into a self-sufficient trader that doesn't need anyone else's guidance by the end of it. I even had to pay over £10,000 to get all this information. That includes scams, scam signals where I lost 3k, scam master account management where I lost 5k, scam pyramid scheme companies for bad courses. Then I found my mentor and I had to pay over $2,000 for just a 2-hour mentorship lesson. What you guys are getting for £650 is access to the chat until the top of the market. So if the top of the market is a year away, do 1 year times 40. So you're definitely getting your money's worth. You also get the course included in the mentorship. And I'll actually not just do a 2-hour lesson with you. I will stay here for a month period to make sure that you become a self-sufficient trader by the end of it. So if you're interested in this, head over to my Twitter, Louis_crypto, to the pinned post and message me there. Thank you guys, and I'll catch you in the next one. Peace.